I wouldn't have voted for Trump, but at least I can wipe my tears away with all this damn money we've been printing. The markets are going absolutely friggin' parabolic on the back of this election, baby. I mean, just a week ago, I took some profit off my portfolio to pay down the mortgage at a time when the market was at all-time highs and the Canadian dollar was at record friggin' lows. Literally within 2 days, I pretty much made back all the profit I took out of the market. What is going on here, folks? Well, I'm going to tell you because we are in a brand new speculative market, which is not necessarily a bad thing. In fact, I want to break down what it's going to take to sustain this market, the entire shift that has happened. We have a new largest company in the S&P 500. There's so much going on here that it's exciting. It's confusing. Where do we go from here? Well, I'm going to break it down. So if you're on a path to financial independence, if you damn well one day want to retire early, join me on that journey by hitting that subscribe, and let's do this together because the S&P is trading at a 30 times multiple. That means if cash flows do not change in the 500 largest US companies in the world, it'll take you 30 years as of today to get a full rate of return. Now, there is some justification to the speculative market. We are on the back of interest rate cuts. We have a more, when it comes to basically taxes on big corporations, Trump's a lot more lenient, right? We're talking about AI, global efficiencies because of manufacturing and robotics. So there's a lot that's going to be pulling forward some of that speculative value, right? But these are the kind of environments the likes of Warren Buffett do not operate very well in. Value investors do not like this because you can't understand what happens tomorrow. You can only base off what's going on today. That's why Buffett's stacking record levels, hundreds of billions of dollars worth of cash. However, I live in the camp of always be buying. The highs, the lows, it doesn't matter. My biggest tidbit of advice is take an emergency fund, maybe put 10, 20K aside just in case the market tanks by more than 10%, and then double up your monthly contributions because I've personally been getting rich through 2022. Anytime the market crashes, I've been getting uber excited, and I made enough money to basically purchase Toronto real estate because of the 2020 crash, right? And anytime the market is extremely fearful, I'm greedy, but now we're in a greedy market and I'm a bit more fearful. So as you know, last week, I took about 15K of profit out of the market to transfer to Canadian dollars because the market was at all-time highs, the Canadian dollar was at all-time lows. And for me to sleep comfortably at night, I'm like, let's just pay the mortgage down a bit. So if the market does correct, I don't feel bad about it. And I don't really care if it keeps going up. And sure enough, in the blink of an eye, just within the last few days, me and my fiance's portfolio have made more money back than I actually took out in profit, which is mind-blowing. And I'm sure many of you out there right now that didn't want to vote for Trump, because I'm a Canadian through the looking glass, through the border, right? Just peering into the abyss to see what's going on with the insanity. And I'm just wiping my tears away because if I voted, I would have voted wrong. Actually, I lost a bet with my friends, but we don't get that politically divisive that I'd lose my friends or family over this garbage. You guys take politics far too divisively. So calm down, come to Canada, do what Canadians do, and just have some of that green stuff. I think you guys need it right now. But we need to talk about how this affects us moving forward. What's going on with the market now? Because we've seen some tidal shifts. I mean, we're talking about new largest companies. Apple has lost its crown. The S&P is up a huge amount. I mean, what are we up? 26% right now. The Q's up 27%. Canadian markets are even up over 20% with the dividend. You could have threw a dart at the board and have made money this year. It is absolutely absurd, and it's not always the stocks you think. Microsoft underperformed. Apple's been underperforming. Look at the banking sector. I mean, the banking sector loved the Trump win. We're seeing major double-digit gains here that are more, in line with what tech companies usually do. But this has led NVIDIA to take the crown, a company that is way more speculative at a 70 times multiple and a $3.65 trillion market cap. That is against Apple now that's only at a $3.4 trillion market cap, but Apple's at almost a 38 times multiple. You know how incredible that is? In the market environment, if you told me that Apple would no longer be growing iPhone sales, where everything has gone stagnant in revenue, yet, their price to earnings and the stock would be at all-time highs. I mean, look at the price to ratio on this. We've never seen price ratios this high on Apple throughout their whole history. This is why people like Warren Buffett are taking cash. This is why they're selling these stocks, because they just don't trust this market environment. Microsoft, 35 times multiple, $3.1 trillion market cap. Amazon, $2.2 trillion, 45 PE. Google, 24 PE. I love Google and Meta. They're probably the two most favorable stocks you can buy in tech today. So how do we justify this? Well, it's easy. I mean, you just have to start understanding we don't know what tomorrow brings, but we know interest rate cuts continue. We just saw another one from the Federal Reserve. That's going to boost the economy, allow people to have more spending dollars, be able to buy more higher priced goods like Apple products. It's going to allow companies like Apple to stop paying so much on their debt. put that back into cash flow in the bottom line, do share buybacks, whatever. And then you've got AI. I mean, there's a whole new suite of products coming out on the back of AI and robotics. However, you got to understand, we went through markets like this before. You experienced it in 2021. We saw it with the MJ boom. We've gone through so many cycles, booms and busts. My only real prediction is that we're going to see continued volatility. I made a prediction after the pandemic, and I said, look, like 2010 to 2020 was the most opportune period because everything was consistent. But now we're in a market of extreme inconsistencies and extreme forward-looking, expectations. So I just think we're going to go through highs and lows like we're seeing now. I think it's just going to continue to be ebb and flow, which is going to allow us to take better advantages of the dip, which I'm hoping you all do and you don't get skittish. This is not a market you want to shy away from, right? But the Federal Reserve, even cutting interest rates, has really been boosting the Canadian economy. In the last day, Canadian dollar jumped up over half a percentage point on them cutting. So long as we keep cutting in line with each other, I'd like to see the Canadian dollar come back because I'm still buying U.S. stock. It's not like I'm bearish on the market by any metric or the U.S. dollar. I'm like, just because I sold some over right at this moment because it was opportune doesn't mean I'm not going to keep converting Canadian dollars to keep buying the S&P next month, next week, whenever I decide. I won't stop doing that. So I prefer the Canadian dollar rallies back. If it rallies back sooner rather than later, that'll benefit me more because, I converted at the bottom and that would feel nice. Otherwise, I would be very careful looking at companies like Tesla. I should have bought Tesla as soon as after the election because I said if he won, I would buy this within a heartbeat because now Elon Musk has a one-line phone call with the guy that can really control policy and compliance around his businesses. And when it comes to compliance, that's something Elon Musk is going to be dealing heavily with very soon, from self-driving to space travel, all that stuff. So Tesla's in a very intriguing place right now. It's finally up, it's just starting to catch up with the market this year. I'm glad I made some good gains on it. I don't know if I'd buy it here. I'm starting to just kind of think that I should just buy it because I do want to own some other tech companies. I'll do a reveal of my fiance's tech companies soon and just show you what our combined portfolios look like, just to give you a clerical view of just trying to continue to balance it. Because I don't think there's anything wrong with owning companies like this for reasons like this. You just have to put logic aside and you have to put valuation aside and just know you're going to be on a roller coaster and you have to stomach it and cost average it. I've just become far too conservative in my age, as you can tell with my side of the portfolio, though we do have small caps and crypto, which are on fire for the most part, right now as well. But yeah, I look at the scale of building like legacy wealth and, wealth preservation at this point. No, I'm not like a multimillionaire, but we've definitely hit the 7-figure club, which is a good feeling for sure. And now my only goals are how quick can I pay the mortgage off, because that's going to cut up $1,200 a month worth of expenses. And at the scale of the fiance's portfolio and we could technically semi-retire at this point if we just didn't have a mortgage. But again, I'm not going to sell my stocks in this market like a huge percentage when we're getting these kind of gains. Yeah, my interest rate's at 5.8%, locked for 3 years. We're now in the second year of this cycle, but you got to recognize in market environments like this, I'll make way more than paying down the mortgage. So it's kind of finding that balance, playing that mix, that game of, what's my risk tolerance and time horizon and how do I feel about it all? And I'd love to know how you feel about it and what you're doing with your capital in that comment section below.